So we are going to cover market structure today. Market structure is one of the most important things to really understand when you're trading. It tells you exactly how to read a trend. Do you know whether price is going to go bullish today? Is price going to go bearish? It's really the bread and butter of knowing what price is doing. So right here we are on the QQQ chart on the 1 hour time frame. Now this is my favorite time frame to look at to really understand overall trend of the market, what is happening, what is the direction that price is going through in more short term, long term, are we in a bull market or bear market? So this time frame, I like to look at, if you zoom out like right here, price is at this area, so it's highlighted 475.68. So that is the current price of QQQ right now. When you're looking at market structure, what you are really trying to understand is higher highs, higher lows, lower highs, and lower lows. What it essentially looks like is if we go to this blank area, market structure is basically, it looks like basically up and down areas like this. So it just looks like zigzag up and down, and it gets overall, if we maybe delete that part here, overall, what is happening to price? Is it essentially going up overall, or on the other hand, are we going down overall? So this is something where you can see overall we are in a downtrend. So that is like, if you look at it as a whole, essentially it's going up and essentially it's going down. This is market structure. Overall, you can see high, this is a high, this is a high, this is a high, this is a low, and then it's essentially the dips. So these are all lows, but each low is getting significantly higher and higher. So this tells you if the highs are getting higher and the lows are also getting higher like this, it's a bull trend. A bear trend like this, you can see this is a high, this is a high, this is a high, because it's on the right side of the trend. And then down here, this is a low, the lows are getting lower. So you could just see overall, it's a bear trend because all these zigzag patterns ended up pointing down. Now, when you are trying to understand, higher high, lower high, it's kind of, essentially, if you are starting out with trying to understand the lingo, it can get a little confusing. So to really understand what is a high and what is a low, a high is going to be, if it is in a bull trend, these are the highs. So you have all these are highs because they are on the side of the bull trend. And then if you look at where are the lows, these are going to be the lows because they're on the opposite side of the bull trend. So basically it's on the underside. So this is a low, then this is a low. So same thing down here, we have a low, and then we have a low, and we have a low. And then of course up here, those would be the highs. So to determine, what is a higher high, what is a lower high, these are higher highs. Because each of them are considered highs, if each of them are highs, what are they going? They're getting higher and higher. So each one is a higher high. These lows are each getting higher. So these are higher lows. Then on the flip side, if these are all the highs, which we mark here, if these are all highs, are they getting, what's happening to them? They're getting lower and lower and lower. So these are lower highs. Then down here, these are all lows because they're on the bottom side of the trend. And so what you see here, they're getting lower and lower and lower. So these are lower lows. That's really how you determine it. So like higher highs, lower highs, just look at the name of them. So it's going to be on the upper sides, the highs, and then the lows. And where is the direction going? If it's getting lower, then it's a lower whatever. If it starts to get higher, it's a higher whatever. So that's like the gist of the market structure names. Now, it's kind of easy to look at this. You could see essentially it's kind of easy to read. But the market isn't always going to be this easy. You're not always going to see highs, 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 and then all these lows. It can get messy where maybe it goes like, if we look at a different chart, like if we move this all the way down, maybe something that looks very clean, it may not be clean. It may be, you know, it's down here, maybe this is right there, you have this right there, and then at that point, what is going on? Because it doesn't look as clean as, you know, high, high, high. Right here, it's a lower high, you know, right there. This is a high, but then it's lower. Down here, this is a higher low, but then this breaks the low. Now it's a lower low. So are we in a bull trend? Are we in a bear trend? How can you tell? Overall, you can tell it is bullish, but at the time when you're doing live trading, how would we know that it's actually going bullish? We don't know that in live time, but what we have to look at is what are all the clues telling us that are outside of the market structure. So if we look back here, based on this QQQ chart, what I like to look at is what is current price doing? So like we talked about, this is where current price is. And to determine, you know, are we in a bull trend or are we in a bear trend? How far should we look back? So I would say, like, if you zoom your chart out like this, just look at the overall movement of really like putting together where is current price. You know, everything is all down here. So really, you don't have to focus all the way down there. That's all the way in the past. I'm looking more at, you know, what are the most recent 3 months or so, or what are the most recent weeks. If we look at this area, what we can see is that overall, you know, we could say it's very bullish because overall price went up. And then down here, overall price went down. So you can see it's obvious that it's going down. Then here, overall it's going up. In this area, are we going bearish? It looks like it's going bearish because, you know, if we take this peak, overall it's going bearish. But how do we read individually, like really zoomed in, how do we know in this day, will tomorrow be a bullish day or will it be a bearish day? If we zoom into this area here, what I like to look for is market structure within the 1 hour time frame. So all these little, you know, you see little dips like this is all market structure. But the one thing you need to be aware of is that even if there is market structure, you should also discern whether it is structure or is it consolidation or is it just choppy. It could just be messy movement and price is not really respecting the nice flow of levels. It could just be messy. So you want to differentiate between the two so that you know exactly what's going on, because if you get that confused, you could essentially be incorrect in the overall direction of the trend. So right here is how I would read it. What I see overall is that, you know, price has been bullish from this part. We'll talk about that in a second. But in this area here, we have a peak high. So this is a high because, you know, it's above everything else. Then this is like a low because it dipped down. And I'd say here, sometimes it can get confusing. So it could look like, is this the high or is this the high? I would just look at what is the overall movement. So for this type of movement, I would say that's a high. This could be a low right there. And I'm just moving my mouse back and forth. I would consider that a dip here, 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 down, there. And then at this point, it just looks sideways. So if you are confused, I would say it's very important, use this specific tool here on the left side, and it's called the path tool. So if you're not entirely sure what is the movement or you're still learning how to read it, I would say use this path tool and just connect the overall swing highs and lows to get this area of the lines. So basically, you're just summarizing all the candlesticks to a line. And from there, you can kind of look at where are the highs and where are the lows. So from here, we could see there's a high, a high, a high, a high, a high. And it looks like the top part looks pretty good. You know, we have each high is getting lower and lower, lower and lower. So we're still looking bearish on the top. It can look a little messy once you look on the bottom. So this is where we see a low. This is a higher low, so this looks bullish. But then this one is lower, so it could look bearish. This is a low. This low is lower than this low, so that shows bearishness. However, down here we have a high. This is higher than this low, and this high is, higher than these lows. So this part looks bullish. So like this part can be confusing because is it going bullish? Is it going bearish? Or essentially, if you delete all that, are we just going messy? Are we just chopping and going sideways here? Because essentially price is not even able to break previous day's range. So if we look at like a high of a day, like right there, or we look at the lowest point here, price is really just going in between the whole range. So like this could just be messy choppiness, because that can definitely show even from like back in the history of price. If we look at right here, it's really just choppy. And if you really try to zoom in and look at these market structure highs and lows, that can make it a lot more confusing because there may not be any. It's just going sideways. In a sideways movement, you typically won't see very clean market structure. It could look bullish at one point, it could look bearish. So something like this, I would say, is a little messy. And when it's like that, the market structure may not be as precise. And so it may be a little harder to determine, is price bullish or is it going to be bearish? In those cases, you would need to look at a little more confluences where, I would look at what is SPY doing. So what is like the NASDAQ looking like? Do we have cleaner movement on that? Maybe QQQ is looking a little messy. And if you don't even really understand the movement, or it's not very straightforward, sometimes it's not. For me, I would skip out on trading something like that. If I'm not entirely sure of the market structure, what is the trend for that ticker, I'm going to leave that out. I would rather go to a ticker, so say SPY, where market structure is cleaner. So right here, if we delete all these lines, we could see here prices going sideways. Then from there, is it breaking higher? Is it breaking lower? It's kind of easier to determine trend from that point because we have stronger levels, or it's just sideways movement, where sideways movement, you'll take the breakout of whichever direction. Same thing here, is it cleaner overall? So something like that, where I would say, like, if it is very confusing, you don't always have to trade that ticker. So if you don't know the movement, maybe the market structure isn't there, it doesn't mean you have to force trading that ticker. Look at something where it's a little cleaner and you can really see overall it's bullish or overall it's bearish. And that way you can trade within that day and know exactly, I know the bias is going to be bullish, or I know it's going to be bearish. That's going to be a lot easier for you if you're just starting out. But like, and sometimes there can be much stronger trends like that, where it's more obvious that the overall trend is bullish. Then if you look at the market structure, sometimes within the market structure like this, it looks bullish, but then it breaks down lower than like these lows, and then it gets confusing in those areas. So those are the times where I would kind of take a hold on maybe entering anything, because I want to make sure that a few market structure highs and a few market structure lows are shown. That way there's more evidence of a trend change. So something like this, where price has overall been bearish, so we have a push down, to really, because trends will change. It will go from a bull trend or a bear trend and then flip to the next trend. So something like this, where it was a bear trend for a while, you could see like market structure up and down. If we draw that, it's kind of a little more obvious, like here, there, a low, a high, low, high, low. This part looks kind of weird because it broke higher, but then it ends up going down. So we're still in a bear trend because this low was broken right there. So you have this low push all the way down here. Then at some point when you look here, it looks like the market structure changed. So something like this, where in between it looks messy, I would just assume it to be one area. We have a pullback, this whole area, it doesn't look like very strong highs and lows. So really in this area, I would just say like, it just looks like this. It's still overall bullish, even though it's not like huge swing highs and swing lows. Essentially, it is still bullish. So you can see that price is essentially just at some points, maybe it's going sideways for a bit, then it breaks higher. So we're just in a bull trend. But really, if you maybe you don't like this, you can also change the candlesticks at some point. Like if we delete that, if you go all the way up here and click this little icon, you can change it to a line. So something like that. If that's a little easier for you to read, you can just like at one point change it to a line so you can see those bigger dips. And then once you understand that, maybe there's a high, you could just summarize these little dips and maybe a little more pleasing to the eye. If not, you could draw these lines. But I would say the most important thing when you are learning trend directions, or like what is the stock really showing you, is look at and try to understand the market structure. The market structure is the number one thing that's going to tell you, are we in a bull market or are we in a bear market? And from there, once you accompany all these structure highs and lows with support resistance, you couple that with gaps or patterns, all those other price action concepts. When you put them all together, those are all added confluences and confirmations of trends. So say that something like you see market structure here, so it's like a bullish, overall bullish trend. Then at this point, how do we know the trend is going to change? And how do we know it's going bearish now? Well, this was the highest of all time. So if you mark that, you can mark that with whatever color. This is the highest point that QQQ went of all the history. Then if you're looking at little market structure dips, we see that it makes a low right here. So this is a low and it makes a low right there. And then down here, this is another low. So when you see that, you have a high of all time, a low. Maybe we're not sure if it's a bear trend just yet. Well, once we made this low here and price curled down, we can already see that it is a lower high. So just like I talked about in a bear trend, these are going to be the highs. So this high is lower than this high. So that's like the first sign that price would go bearish. And then the next confirmation is that price broke this low. So because price has already made two highs and then curled down and this area was broken, it just shows that price is now going bearish because it's essentially just pushing downward. So this is like the next low. So with two highs like that and two lows, that is honestly enough for you to tell that it's going bearish now. So from this point on, once you have really, I would say, to have really good confirmation of trend direction, two highs and two lows, whatever bull trend or bear trend, that is going to give you more of a more concrete understanding that now the trend has changed to a bear trend. And from there, once you can see that and you identify it's now bearish, then you can start looking at, the support resistance. Is it retesting an area? Do we have a breakout of this low? Maybe there's an entry right here on a smaller time frame for puts. So then from there, you start looking at the smaller time frames for your day trading entries, and then you can just trade with the trend. So like that's one of my rules when I'm trading. If I'm taking any trade within the day, I need to make sure I'm trading with the trend. So trading with the trend just means that on the 1 hour time frame, I have determined that price is overall going bearish. So on the 5 minute time frame or on the 2 minute, when I'm executing a trade, all I need to be sure of is, am I trading in a bear trend? So I would only take puts that day because the trend is bearish. Or if we're in a bull trend like this, the overall trend is bullish. So maybe that specific day I only take calls because, any kind of trend or any kind of puts for me to do expecting price to go down, I don't know how long that trend is going to be sustained. If we're in a very strong bull trend, any type of little movement downward may not be that long. It could be maybe I enter and then right away, that's the end of it. It starts going bullish. So in order for me to have a very high probability setup for any day trades is when I trade with the trend, which is determined from the 1 hour time frame. So I would say 1 hour time frame is probably the time frame that you should start off with. That way you know how does all these movements go. And then when you are studying and really just looking at, just trying to understand how to read a chart, the market structure is the first thing that you should just understand. Can you identify a bull trend and can you identify a bear trend?